for you. Let's quickly look at the events that you need to watch out for in today's trading session. We have India, China and UK reporting their IIP numbers today. We also have the UK GDP number that is likely to come out. We also have a couple of corporate earnings. We are in the thick of earnings season, as we all know. We have M&M, we have PB Fintech, ABB India, InfoEdge, BHEL, BEML, we have Garden Reach, Rail Vikas Nigam, Delivery, Cochin Shipyard, Fortress Healthcare, all of these coming out with their quarter 3 numbers. We also have VRL Logistics, the buyback record date is today. We also have PM Modi, who will be flagging off 2 Vande Bharat trains today.
Okay, let's get in some other update because what's happening in Turkey, more than 20,000 people are now known to have been killed in the earthquake in Turkey and Syria. Now, rescuers are still searching rubble for survivors, but hopes are fading almost 4 days since the tremor struck. Freezing conditions threaten the lives of thousands of survivors who are now without shelter, water and food. Turkey's president called the quake the disaster of the century. Even the UN chief Antonio warned the full extent of the catastrophe was still unfolding before our eyes, especially in Syria, where long-running civil war has devastated the country.
And the US government has clarified that it is not looking to impose sanctions on India for its oil imports from Russia. Remember, Russian oil imports have been a sticky point with the West, often commenting on how allies must stand together and avoid buying oil from Russia in solidarity with Ukraine. However, India time and again has asserted that it will take its own call on oil imports based on its economic conditions. But now an official from the Secretary of State has come out and clarified that the relationship between the US and India is most consequential and that they are not looking to impose any sanctions.
And Unilever said that it will continue to raise prices for its detergent, soaps and packaged foods to offset rising input costs and ease those hikes in the second half of 2023. The parent company of Hindustan Unilever expects cost inflation to continue in 2023, forecasting net material inflation in the first half of around 1.5 billion euros. When it comes to coverage of the inflation that we have seen, we are currently only sitting at about 75% of the total cost inflation covered, said the management.
Ride-hailing major Lyft shares fell more than 30% during after-hours trading after the company issued weak guidance in its earnings report. The company recorded flat quarter-on-quarter growth in active riders in the third quarter, which remains below the pre-pandemic levels.
Okay. And in more layoffs in the US, Yahoo is set to eliminate more than 1,000 employees or 20% of its workforce by the end of 2023. Private equity firm Apollo Global Management had acquired 90% of Yahoo from Virgin in September 2021. Meanwhile, the media conglomerate Corp said that it would cut 1,250 jobs after it missed estimates for the second quarter during earnings due to the weakness in the news and digital real estate business.
And commodity trader Trafigura Group is facing more than $500 million in losses after discovering metal cargoes it had bought didn't contain the nickel which they were supposed to. Past 2 months, Trafigura has been uncovering the systematic fraud, and they have started legal action against Indian businessman Pratik Gupta and several companies connected to him, including TMT Metals and subsidiaries of UD Trading Group.
Moving on, the US Senate held its first public hearing on the Chinese spy balloon. Lawmakers grilled 4 Defense Department officials about it when the military learned of the balloon and why they waited a week to shoot it down. Officials said that the balloon first entered US airspace in Alaska on Jan 28th, where it was immediately detected by the NORAD, the Joint US-Canadian Air Defense System.
And former Vice President Mike Pence has been issued a subpoena by special counsel overseeing criminal investigations of ex-President Donald Trump, one of which is focused on Trump's efforts to overturn the results of the 2020 election. Now, Member Pence served under Trump and was pressured by him to refuse to accept the certifications of the Electoral College, states of several states that gave President Joe Biden his margin of victory in the 2020 race.
Ankita, every generation has this one new technology that, there is a different way. Every technology, there's always updation. And now the way humans live, work always changes. And the buzzword of this decade is artificial intelligence and machine learning. Unless you are actually sleeping under the rock, you must have heard of about the chatbot sensation, ChatGPT. And now Google has introduced its own AI Bard. So how do these two AI chatbots stack up against each other? That's what we're going to explain.
Every generation has a technology that changes the way that humans live and humans work. And the buzzword of this decade has to be artificial intelligence and machine learning. So unless you're sleeping under a rock, which we hope you aren't, you must have certainly heard about the chatbot sensation, ChatGPT. And now, Google has introduced its own AI, which is called Bard. So how do these two AI chatbots stack up against each other? That's what we're here to explain today. First, ChatGPT. Now, you must have already had your share of fun exploring this chatbot in its initial stages. And it's possible that Google felt like it must take advantage of all the hype that has been building around the Microsoft-backed chatbot. So they launched Bard, which is in direct competition to ChatGPT. But the launch did not work in favor of Bard as it prompted a wrong answer to a search query. And the effects of the failed chatbot reflected in the share prices of Google. The tech giant stock has taken a cut and has slid 8%, while that of Microsoft was up as much as 3%. But the big question among people who are following this space rather closely is, how are these two chatbots different? Whether it's ChatGPT or Bard, they are still in their learning phase as of now. Neither of them claim to provide a seamless experience just yet. And that's the similarity that they both share, at least at the moment. So as OpenAI builds ChatGPT in public, Google, by its own admission, has taken a more cautious route for Bard. Possibly because a lot more is at stake for the giant corporation. That's because Google plans to merge Bard with its most successful, its most iconic product, which is Google Search, which really redefined the way we work in the 21st century. So chatbots may still be in a testing phase right now, but that is the advantage with artificial intelligence. It keeps learning, it keeps getting better, and one day they could be smart enough to find real-world uses that make them that much more important. And big tech's rush to capture the market at such an early stage of development is quite clearly an indication that they believe in the power of their chatbots and their underlying AI tech.
Well, let's quickly slip into a short break. There's lots more coming up on the domestic front on the other side. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Vinny Motiwala. Now let's quickly go on to news on the domestic front. PM Modi will inaugurate India's 9th and 10th Vande Bharat Express. Both inauguration will be done from CST station. This will be Mumbai's second and third Vande Bharat train. And the route of these trains will be the first from CSMT to Solapur and another is from CSMT to Shirdi. Now, ET Now's Aishwarya Patil took a tour of one of these trains. Let's have a look at what she found out.
Well, Prime Minister Narendra Modi is all set to inaugurate 2 new Vande Bharat Express trains right here in Mumbai from the CST station, which is the 10th of February. These two trains are interstate trains. They'll be running from Mumbai to Solapur, and the other one is the Mumbai to Shirdi train. Currently, we are inside the Mumbai to Shirdi train. This section you can see here are these mini pantries that will be available inside Vande Bharat Express trains at regular intervals, available for refreshments for the passengers. This section here right now is the executive section, where you'll find the utmost comfort available in the Vande Bharat Express trains. They're rich in features in terms of infotainment, Wi-Fi, sensor-based doors, sensor-based reading lights, all of these features. In terms of comfort, what these trains offer is reclining seats. These seats can also turn 180 degrees. You could face the windows, enjoy the views. Also, in terms of other features are fire alarms. There's a talkback, emergency talkback that is available beside these seats. You can talk to the pilot in terms of an emergency case. There's also footrest here, and beneath every seat you'll find some charging stations.
Okay, that we will be waiting for that coming in Vande Bharat train in Mumbai. But let's move on and look at what's the exciting lineup coming in on the market. Starting with Zomato's numbers. To talk about them at 8:15 a.m. we have Karan Tarani, Senior Vice President at Elara Securities. Moving on at 9 a.m. we have Satish Pai, MD at Hindalco Industries, to talk about their numbers. Talking about markets, we have Siddharth Bhaiya at 9:20 a.m. Managing Director and Fund Manager at Equitas Investment. While in terms of 9:30 a.m. we have Safir Anand, strategists and investors, to talk more about markets, numbers, as well as at 9:45 a.m. Rajiv Rajgopal, Managing Director at AkzoNobel India, to talk about their Q3 numbers. 10 a.m. we have Rahul Mittal, Chairman and Managing Director at RITES, joining in with us. 10:20 a.m. we have Dr. Anil Pant, MD and CEO at Aptech, to talk about their numbers.
And well, that is a power-packed lineup for you on the market. And at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Fund. On this edition, we discuss India's economic growth and how that can benefit you. Listen in to what we have to tell you.
Hello and welcome to yet another edition of Nivesh Ke Fund. I'm Ajay Sharma. Now, it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it. And the easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Fund. Thank you for watching.
Welcome back. You're watching Market Cafe. Now, MSCI's quarterly rejig is in focus. Bank of Baroda and CG Power are the two inclusions in the index, while it has reduced its weightage across the multiple Adani Group stocks. My colleague Somit has all the details, so we'll quickly go across to him and find out. Over to you, Somit.
Well, the quarterly review index review has been announced by MSCI, and these changes will be effective from the 1st of March. So, as expected in the global standard index, the MSCI has added Bank of Baroda and CG Power, and the weightages for these two couple of stocks are expected to be in the range of around 0.24 to 0.27%. But in case of inflows, CG Power is expected to see inflows of close to 161 million US dollars, which is nearly 12 times its 20-day average volumes, while in case of Bank of Baroda, if you see the flows are expected to be to the tune of close to 145 million US dollars, which is nearly 2 times its average daily volume. And when it comes to Biocon, that is one stock that has been removed from the MSCI Global Standard Index, and the weightage is expected to go down by around 0.14%, because of which there could be outflows to the tune of 68 million US dollars, which is nearly 11 times its average daily volume. However, the more important announcement has come in for the Adani group of stocks. Now, the MSCI has reduced the weightage on 4 Adani group companies, that is Adani Enterprises, Adani Transmission, Adani Total Gas and ACC. Now, the cumulative reduction in weightage in these 4 Adani group companies is close to 82 basis points, because of which Nuvama is expecting an outflow of close to 428 million US dollars. However, do remember that this outflow is lower than what the street was expecting. Apart from this, the weightage of HCL Tech, JSPL and Shriram Finance has also reduced by around 0.03 to 0.2 basis points, while stocks like Reliance Industries, HDFC, Infosys, ICICI Bank and TCS have seen an increase in their weightage when it comes to the MSCI Global Standard Index.
Okay, Somit, thank you so much for that update coming in this morning. But let's talk about Zomato's Q3 numbers. Some, on some fronts there is a miss, and some front, they have done better than what was the street was expecting. So let's call it firstly a mixed set of numbers that has actually come in from the company. Especially the commentary has been quite bullish. Now let me just give you all a breakdown on terms of the numbers. Adjusted revenue, that's seen a growth of around 12% coming in on a quarter-on-quarter basis. Adjusted EBITDA loss, this is the overall loss, that adjusted EBITDA I'm talking about, that's a loss of 265 crores versus 192 crores. And the loss of the company, that's come in at 346 crores versus 251. So an expansion and widening in terms of the losses of the company. But food delivery business, that had turned EBITDA positive last quarter, that has continued this quarter as well. And the adjusted EBITDA in the food delivery business is at 23 crores versus 2 crores in the last quarter. Adjusted revenue for food delivery, mild decline coming in over there. Let's not forget, people had started stepping out. More dine-ins are there, so the orders in terms of order volumes, that have seen a reduction coming in as well. And overall, the gross order value for food delivery, that is at 6680 crores versus 6631, so almost muted in terms of that as well. That is what was expected, muted GOV growth. Now even the monthly transacting users, they have remained flat as well. This time it's 17.4 million users versus 17.5 million users last quarter. Hyperpure, seen a good growth coming in terms of revenues. EBITDA losses have remained flat on a quarter-on-quarter basis. Quick commerce, that is the Blinkit side, that also the adjusted revenue has seen a strong growth coming in. But yes, orders have seen an increase over there. Average order value, slight bit of a reduction is what we're seeing over there. So yes, that's a concern that we are keeping an eye out on. What the management also highlighted is that there's an industry slowdown in the food delivery business post Diwali. Food revenue was down by 1%, so that's a concern in terms of the decline because of the order volumes which are declining, is what the management has highlighted. But they're saying that yes, they have started seeing some bit of a green shoot coming in. Overall, the challenging environment was there, but now green shoots are coming back in terms of demand in the recent weeks. They're confident of reaching their adjusted EBITDA break even as per their earlier estimate, which was Q2 FY24, and maybe it could be earlier as well. And in Jan, the management has already highlighted that yes, we have seen that excluding Blinkit, they have broken even in the business, that is excluding the quick commerce business. In Jan, they have broken even. So yes, the commentary seems quite bullish. That's the factor that we're keeping an eye out on. And even when you look at it, Jefferies has continued to maintain its buy rating, given a target price of 100 rupees per share.
Well, mixed results and a positive commentary coming in for Zomato there. Now we also have Lisa in the studio with us, who will tell you to keep an eye out on all the brokerages that you need to watch out for in today's trading session. Lisa, you have all the brokerages. Tell us, what are the stocks that we need to watch out for?
Very well. Good morning to you all. Starting with Morgan Stanley on Sobha Developers, they have maintained an overweight on the stock at a target price of 1,024 per share. According to them, the overweight stance is on the back of strong pre-sales, deleveraging goals and also the inexpensive valuations. Moving on to Voltas, CLSA has maintained an outperform on the stock at a target price of 935 per share. The EBITDA margins are at multi-year lows. However, the cooling products, that was quite resilient and it saw a growth of 11% on year-on-year basis. JP Morgan on Rainbow, they have maintained an overweight on the stock at a target price of 900 per share. They say it was another strong quarter of EBITDA beat and they remain optimistic about Rainbow's growth prospects on the back of 1,000 beds in the next 5 years. And also they expect upward revision to the consensus estimates. Lastly, JP Morgan has maintained an overweight on Hindalco at a target price of 525 per share. They say that strong copper and improving aluminium, that is expected to hold Hindalco on strong growth going forward. And they have cut their FY23 estimates on the back of the 3Q miss at the downstream subsidiary. So these are the stocks that are on brokerage radar for today.
Okay, Lisa, thank you so much for that. But all eyes are going to be on M&M. They will be reporting their numbers. Let's go across to Somit, who's here to give us what should we be expecting from the automaker this time.
Well, Mahindra & Mahindra on a standalone basis is expected to report a stable set of numbers. Now, if you see compared to last quarter, the company's revenues are expected to increase by around 3% while the EBITDA number is expected to increase by around 9%. Now, margins are expected to come in higher at close to 12.7%. Now, the main reason behind this rise in revenue on a sequential basis is the higher volumes. Now, in the volume side, if you see specifically tractor volumes were higher on a sequential basis, while the automotive segment volumes were on the lower side on a sequential basis. Also, if you see the tractor segment volume mix stood at around 37.5% in the third quarter as compared to 34% in the second quarter of FY23. Now, the EBITDA growth, now that is around 9% and this is largely on the back of a better sales mix, lower raw material prices and operating leverage that the company benefited or company witnessed in the third quarter of FY23. In fact, the automotive EBIT margin is also expected to come in at around 6.5% as against 6.1% reported by the company in the previous quarter. However, on the net profit front, if you see, there could be a decline of 15% and this is largely on account of lower other income, because if you see in the previous quarter, the company had received a higher dividend from Tech Mahindra as compared to this quarter. In the previous quarter, Tech Mahindra had announced a dividend of around 30 rupees per share, while in this quarter, that is the third quarter of FY23, the dividend amount was lower at around 18 rupees per share. However, apart from earnings, the key things to watch out for would include the commentary on sales outlook, what is the tractor sales outlook going ahead, and how were the bookings that they have seen for the newly launched XUV 400.
Well, thank you for that lowdown, Somit. And now we have Shesha in the studio with us who will take us through all the stocks that we need to keep on our radar. Shesha, tell us what are the stocks that we need to watch out for.
Hi, good morning. So Aurobindo Pharma will be the first one in focus on the back of its results. Revenues for the quarter gone by stood at 6,388 crores, up 6.7% on a year-on-year basis. But the bottom line has taken a knock this time around. EBITDA margins have declined a tad bit. They've come in at 10.1% this quarter versus margins of 12.3% that the company had reported in the previous quarter, indicating a contraction of over 200 basis points on a year-on-year basis. Apart from this, the company has also approved sale of units constituting API non-antibiotic division of the company to Oro Pharma India. So keep an eye out on this stock on the back of its results. Voltas, meanwhile, has reported a weak set of numbers. Revenues have grown by about 12% on a year-on-year basis, but the company has reported a loss on the bottom line. Company has reported a loss of about 110 crores this quarter versus a profit of 96 crores that the company had reported same time last year. United Breweries over here also a weak set of numbers. Remember, there's an exceptional item which has impacted the bottom line, but even if we consider the adjusted net profit, the company has reported weak set of numbers. Revenues have come in at 3,700 crores, an uptick of a marginal 5.5% on a year-on-year basis, but the loss has come in at 1.81 crores this quarter versus of a profit of 91 crores that the company had reported in the third quarter of FY22. Moving on to Lupin then, where margins have come in at 13% this quarter versus 9.9% margins that the company had reported same time last year. And the profit after tax has declined a whopping 71% on a year-on-year basis. Lastly, Lumax Industries, another one in focus on the back of its results, where revenues are up 33% on a YOY basis. Company has reported profit of 30 crores this year, versus a profit of just 7 crores that the company had reported same time last year, indicating an increase of a whopping 336% on a year-on-year basis. So on the back of these results, keep an eye out on all these stocks. Back to you.
Okay, Ashesha, thank you so much for that. And as of now, when you look at it, the SGX 50 is indicating a bit of a negative start coming in for the Indian markets, given that the US markets were also weak. But